Have you ever seen this happen? A company announces what sounds like pretty good news, but then its stock value just completely craters. It's a total paradox. And today we're going to unpack exactly what happened with the global tech firm Concentrix.
All right, let's just rip the Band-Aid off. In late March 2024, this is the number that investors in Concentrix woke up to. The company's stock had plummeted by over 25% in a single morning. A quarter of its value just gone in a matter of hours.
So yeah, this leads us to the big question we're tackling here. Why? What in the world could cause such a massive and what seemed like a sudden collapse for such a major global company?
Well, the answer, like it so often does, starts buried inside the company's latest quarterly earnings report. To really solve this puzzle, we have to start decoding what were, some very mixed results.
Okay, so check this out, because right away you can see the contradiction. On one hand, Concentrix actually brought in more money than Wall Street thought they would. They beat their revenue forecast, pulling in $2.5 billion. But then you look at their earnings per share, or EPS, which is a huge measure of profitability, and they missed what everyone was expecting.
So what you have here is a classic mixed bag report. Think of it like a report card. The good news, hey, revenue was up over 5% from last year, which beat what the analysts were predicting. Awesome. The bad news, though, is that their profitability fell short, and not just short of expectations, but also lower than where they were at the same time last year. This is our first major clue.
But before we go any deeper into those numbers, it's probably worth taking a quick step back. Who exactly is Concentrix? What is it they do that powers a business this big?
So Concentrix is a massive global player. We're talking about a nearly $10 billion company that partners with over 2,000 clients. And get this, that includes more than 160 of the Fortune Global 500 companies. What they do, in a nutshell, is design, build, and run really crucial business operations for the world's biggest brands. And they're specializing more and more in using AI to transform how that work gets done.
And just to be clear, this isn't just them patting themselves on the back. Independent industry analysts, like the Everest Group, shown here, rank Concentrix as a leader in their field. They're right up there with household names like Accenture and IBM. So this is a serious, well-established company, which, makes that 25% stock crash even more confusing.
So where's the money coming from? As you can see, their client mix is pretty diverse. About a quarter comes from tech and consumer electronics, another quarter from retail and travel, and then you've got big chunks from media, banking, and healthcare. Now, I want you to keep this chart in your mind because the real story is hidden inside these different slices. And that brings us to our next clue. Because this isn't a simple story about the whole company doing poorly. No, this is really a tale of two very different stories happening at the same time, inside the same company.
And here it is. This is the heart of the problem. When you actually break down that overall revenue number, you see this huge split. Their business with banking and financial services clients, it was booming, up 13%. Retail and travel, also looking solid, up 6%. But then, look at the other side. Their business from the tech and healthcare sectors actually shrank by 6%.
And that right there is what spooked the market. See, it's not just about the final number. It's about the health of the business underneath. When your single largest sector, technology, is actively shrinking, it creates a ton of uncertainty and risk. And that feeling completely overshadowed the good news happening elsewhere in the business.
So the company's facing a challenge. How are they responding? Well, they are actively trying to shift the narrative, and it is all about their huge bet on artificial intelligence.
On the company's earnings call with investors, the CEO, Chris Caldwell, was crystal clear about their game plan. He's framing the company's entire future around their AI solutions. He's emphasizing how they're either automating work completely or basically giving their human workforce superpowers to be more effective.
And they've got one heck of a number to back that talk up. The company reported a staggering 61% year-over-year increase in what they call wins with technology. What that means is new client deals where their tech and AI services were the main reason they got the business.
And the momentum, it doesn't stop there. The value of the new AI contracts they signed literally more than doubled just in the first quarter. They're expecting their main AI product to hit $100 million in recurring revenue by the end of this year. Oh, and they're also using this tech on themselves to save about $40 million in costs every year. So the AI strategy, it seems to be gaining some serious traction.
Their entire AI strategy really boils down to this three-step plan:
First, use AI to extend their market reach, to become the go-to partner for these complex tech projects. Second, broaden the value they offer by rolling out new tech and services. And third, expand what they call their wallet share. Basically, use automation to become so essential to their clients that they just keep getting more and more business from them.
So all of this brings us to the road ahead, and to the fundamental conflict that's sitting right at the heart of the Concentrix story today.
And really, it all comes down to this. On one side, you have the immediate challenge. That weakness in their huge tech and healthcare client base is dragging down profits right now and creating a lot of risk. But on the other side, you have their long-term strategy, this massive and so far successful pivot to AI that promises huge growth down the line. That's the paradox that investors are trying to figure out.
And this leaves us with the billion-dollar question that's just hanging over the company. The market reacted harshly to the problems of today. The question is, will this AI-powered future that Concentrix is building so quickly be enough to overcome those present-day challenges? Well, only time will tell.